Hey, good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, March 6th. We got a couple important economic news releases to go over this morning, and we'll jump right into it and then start with the weekly jobless claims. So last week we had 349,000 people applied for unemployment, which kind of surprised the markets because it was kind of averaging in the mid 330 range. And so the forecast this week again was what typically it's been the forecast at 335. This week it came in at a whoppingly low 323, so it dropped tremendously. So we had a higher one last week and a lower one this week. So I guess if you average it out, it kind of brings us to the mid 330 range if you combine the two and take out the average. But we got productivity for the fourth quarter. So we had the previous reporting was at 3.2%. The next forecast for this one was at 1.7, and it came in slightly higher than the forecast. So a little bit better news than we anticipated. We also got and last but not least, this is the factory orders for the month of January. So back in December, we had a negative 2% in the manufacturing. We had forecast again continuing the contraction side of things at negative 0.6%, and it came in a little bit worse. So overall, decent numbers, at least with the important ones with the weekly jobless claims. Productivity, it's still low when you look at 1.8%, but of course a lot of that's being brought upon or blamed on the weather, the very bad weather we've been getting back east, and same thing with the factory orders. So we'll jump over to headline news right now. And right now the stock market's actually doing pretty well. Dow's up about 80 so far this morning, so good news on that front. But we also had some Fed members speaking today. We had two of them so far in the morning, and then we got some more scheduled for later in the evening. So those potentially could change the markets. But one member, Fisher, had mentioned his concern about the stock prices. He's kind of attributing it to the quantitative easing that probably affects that of the quantitative easing, and maybe he feels the Fed really needs to kind of keep an eye on this as maybe it creates another bubble. That's one of his concerns. And of course, agreeing with him in some respects is Plosser. He's concerned about the effects that quantitative easing has, and this could take many, many, many years, as he kind of indicated, for us to get back to a normal economy where we had and he does think 2014 will be better than 2013, but again, we're not going to. He doesn't feel that we're going to have the same returns we were getting prior to the credit crunch and prior to the quantitative easing, as this is going to take time to kind of sort itself out. All right, so let's go ahead and take a look at the bond market, see what interest rates are doing today. As we can see, we're actually having on a downward trend, especially after Tuesday with that big drop right down there. So right now we're down to about 104.38 after closing 104.47. So we're currently about 9 basis points lower than where we left off yesterday. So in some cases, this could be a pricing for the worst for lenders if they didn't make one yesterday. As you can see, the long wick, meaning that it touched up and it pulled back quite a bit yesterday. Today, we kind of extended our downward trend, and we're still lower than where we left off yesterday. So unless that changes, we could see some more. But tomorrow will be the big day. It could help break us out of this when the Bureau of Labor Statistics release their job numbers. So it comes in disappointing. We could have a nice little rally in the bond market, and the stock market will obviously go the opposite direction as they're kind of leveraging itself into a position where they think it will be a decent jobs number, especially after the weekly jobless claims. All right, folks, thanks for watching. But again, unfortunately, technically the rates haven't really changed today versus yesterday. In some cases, it could be a little bit worse than yesterday, as we do have trending downwards, rates kind of going up, meaning rates are starting to go on an upward trend right now. All right, thanks for watching, folks. We'll see you guys tomorrow and for the big news. Have a great day.